Hey, good morning, everybody. Welcome to Forex.Today. If I can get the disclaimer. There it is. Welcome to Forex.Today. Whoa, it's a Monday. Monday. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Namaste. Thank you for being here. It is Monday, the 5th of March. Monday, the 5th of March, 2018. Cool. Thank you for being here today. Really appreciate it. Thank you for your loyalty and respect you show me every day. Thank you for coming. Hey, if you're watching on YouTube, click like and leave a comment. Just say, hey, what's up? Everyone else I see in the chat room, what's up? Do these sessions 7:30 in the morning, Monday through Friday here at Forex.Today. And this Friday, I will be at FX Street for Trade Non-Farm Payrolls Live for the 143rd month in a row. Yeah, that's just shy. That's 1 month shy of 12 years of doing that one webinar. Wow, that's ridiculous, huh? Is that funny? Wow, funny like a clown. So thank you so much for being a client of Trader's Way. I'm their Chief FX Market Strategist, which means I wake up in the morning and I want to make you a success. That's my raison d'etre. You are my sweet baby. However, you still need to do the work. You still need to put in the blood, sweat, and tears for years. And the secret sauce to all of this madness is falling in love with being a currency trader. You got to get past the simpleton version of, I want to make a lot of money. Once you get past that, if you just say, wow, this is really cool, man. I'm a currency trader. Look at me. I'm reading financial newspapers. Look at me. I'm printing out charts and reviewing them. How awesome. Okay. Chuck, you probably have to scroll. So anyways, honestly, when you get to that point, you get to you reach another level of enlightenment and you kind of just move to the next step. So I like to give the example of, me sitting out on the back deck on a Saturday morning, and I'm reading a newspaper or going through my charts, and I'm smoking a cigar, and I got the warm sun on my face. I'm drinking some Blue Mountain Jamaican coffee, and I think to myself, this is cool. This is cool. I'm a real currency trader. It's cool, right? Oh, Joe, really? That's cool. When you say my girlfriend doesn't know who Warren Buffett or Soros are, but she knows who Wade is, I'm like, whoa, hey now, I got to watch my back, but that's cool. Yeah. Last time that happened to me, Joe, I got in a heap of trouble. Yeah. Oh, well, namaste. I appreciate that. So, anyways, thank you. So you want to do some currency trading? Let's get her done. I got to click something over here. How about that? Yeah, cool. Oh, thank you, Ted. So it is up on YouTube. Cool. And I want to remind everyone that the videos, I have a new process of getting them to YouTube faster. So so you can also get the videos there, and if you click on the subscribe thing, YouTube pings you like, boom, webinar live on YouTube available now. So Try that. Click the subscribe. All right. Oh, cool. Yeah. See, Martin says that works great. Yeah, I've never actually used that feature before, so I don't like YouTube never pings me, but there you go. So it does give you a heads up, right, Martin? So that's cool. So make sure you subscribe. Look at this. US dollar, or sorry, Aussie versus US dollar turning red off of a 21. Euro US dollar turning red off of a 123. US dollar CAD busting out green candles, which is the same as these red candles if you're looking at US dollar strength, right? Gold coming down, which is another sign of US dollar strength. Oil coming down, which is another sign of US dollar strength. Maybe we have some US dollar strength going on here. And that would suck if you shorted Mexican peso last week. It would suck. Yup. Yes. So here we are. Let me get out my handy dandy notebook. Good. So here's where we are now. Maybe. The macro version of that is this. My problem, or one of my problems, I got 99 problems, but a pip ain't one. My problem on this particular trade is this is my entry right in here. Morning, Jorge. Well, Emilio says, how would US dollars affect the stock market indices? This is where we can argue here. Some people believe it will affect US dollar indices, and other people believe US stock market indices affect the dollar. Okay. So I think it's the other way around. That's just how I think. I think the US the stock market indices or other exogenous variables impact the dollar, not the other way around. But two people could argue this out all day and there's no proof. So that's just how I put it together. Okay. Yeah, just pick a team, really. So, see, the way I boil things down, and this may be right, this may be wrong, it's just my perspective. And I'm smart enough to know that it could be confirmation bias and all that kind of stuff. But look, as long as you have a way, even if it's wrong, if you make money, it's right? I mean, it's just a process of thinking. So I boil things down to global macroeconomics, risk on, risk off, all that kind of stuff. So what the dollar is doing now is based on what's recently happened today or in the last shorter run, right? And the dollar can change depending on how the U.S. stock market reacts at 9:30 to whatever is going on in the market. And I don't think it's because of what's happening to the dollar. I think it'll do what it wants to do, and then the dollar will react. Now, again, I think it's two sides of the same coin. We could argue, no, it's the other way around. This, so that's my bag, baby, right? So I'll say things like risk on or risk off and go that way. So, like, what are the big events this week? We got Aussie dollar's going to move, right? Right? The dollar's going to move. We know the yens are going to move. Maybe that has nothing to do with the U.S. stock market today, right? Why are those currencies in particular going to move? Yeah, we got some central bank action this week. We can go through the calendar. Okay. But anyway, so that's where I'm sitting on this sucker. Kind of ugly chart, right? I think it's an ugly chart because, you know, here's our bottom, here's the top, and nothing's changed. I'm short just below a pivot though, and you can see how important this is. Look at this top today. Does anyone think it might have to do something with this pivot here, which is this dotted line? It could be, right? It could be. So, sucks that we're here though. So it'd be more like I'm hoping that whatever happens to the stock market at 9:30 would create dollar weakness, but hope's not a strategy, right? Yeah. Yeah, that's correct, Barry. And that's called intermarket analysis. Okay, so anyways, let's go through our charts. This is a 4-hour 21. How many people have read my book? I don't even have a copy anymore. What year was that published officially? Man, because I keep saying 8 years, but I've been saying that for 8 years. Ah. All right. Published 2008. So it's 9 years ago? No, that's 10 years ago. It's 2018. Hey, I wrote it. I published. I didn't write it. I wrote it more than 10 years ago. I wrote a book 10 years ago. Look at that. Cool. One of the basic premises of the book is to sell retracements back to the 21, right? Damn, that's weird. I wrote a book 10 years ago. Yeah, that's weird. It doesn't seem that long ago, and then I think about it, and then it does seem that long ago. Anyways, one of the basic tenets of the book is selling retracements back to the 21, right? This is called a reset, or right? This is where the market's at fair market value. Looks like the bears win this. Sell at the 21, sell at the 21. When you are below the 21, you are bearish and aggressive. Okay? So that's what that's about. So if you happen to already be bearish on the Aussie dollar, which you can see may be the case, right? You may have been bearish since that. And that is February, bro. February 15th. Okay. This is an absolute perfect pivot entry too, isn't it? For a sell, and your target's here. So we missed it by 3 pips. But that's last week's move, right? This week's move, unfortunately, kind of requires it to come back up to this area. But that may not happen. But I'm looking at that as pivots. And then I'm going to look at this like kind of this way too, right? it's kind of suggesting that it wants to do this. And if it did that, ooh, let's think about that. If it did that, then it's going to kick off the 21, and then it's suggesting reversal. Ooh, let's look at this closer. I hate that kind of stuff because I don't want it to reverse yet, in the sense that the 21.55, the angle in separation is still quite bearish. We're in a bearish move. I don't like predicting up. Let's say if it did go up, this would be the exact price. So if we were down here, or just even below that, there's no way in heck this is going up. So it's kind of like it kind of has to go up here. So if you happen to be a bull, you're going to want to see something like this week. Okay? If you're a bear, you certainly should have sold it hours ago. I mean, many hours ago, 12 hours ago. I wouldn't expect it to go up, but if you're a bull, I think you might want to look for an entry down in here on price action like that if you're a bull. If you're a bear, you're already selling it up high and you're fine. Well, I don't know, Joe. Is Australia an exporter of steel to the United States? I don't think so. They sell iron ore and coal to China to make steel, but they don't. Australia generally, I mean, of course they probably, I mean, they must, but they don't. They're not really a global exporter of steel, in particular to the United States, right? So, I mean, think of it. Even China only is 3% of the U.S. steel market, right? So, like, even China is not a player. The thing with steel, you guys want to do like a quick economics history? Yeah. Let's say you're in the northeast of the United States 150 years ago. Pennsylvania or Massachusetts or New York, that kind of stuff. There are factories there that are big and such, require a huge amount of investments. Do you want foreign competition? If you had to spend in today's money, let's say $1 billion to build a factory, would you like cheap imports coming in from other countries? Nope. You know, but then you look at things like steel. What's the problem with steel? Well, the problem with steel is it's heavy. Right? Particular 150 years ago, right? How did they move? How did they move? So let's, you know, I mean, even in the 30s, right, when we were building New York City, where did New York City get its steel from? No, but from whom? Yeah, Mason. Pennsylvania probably or something, right? Carnegie. Yeah, that's the thing. Like, it wouldn't be Germany. I don't think it'd be Canada. I mean, it was even difficult then. Right? So it'd be more like, yeah, Bethlehem, U.S. Steel. That's Pittsburgh, right? Yeah, Fort Pitt. Okay, and I'm sure, but I'm just saying that maybe in the 30s it was possible, but still, at some point, the cost of transporting this stuff was difficult, right? Now, if you go back before, the beginning of the Industrial Revolution, let's say the steam engine certainly made it easier to move such things, right? Easier than a horse-drawn carriages, but at some point you just couldn't move heavy product very far. So I'm not as expert in steel. Like, can China make steel and ship it to us cheaper than we can make our own? I guess maybe that's the point, right? Well, the problem with China, I believe, is that they make steel not to do it profitably, but to keep workers working. And the output of that, besides political stability, is a huge stockpile of steel. Right? And so that lowers the global price when the global supply of steel is higher. So maybe that's kind of what it is. And so then the United States responds by closing borders, which is not the right move either, but maybe it's a setup for negotiation, who knows? But whatever. Yeah, so it's all, I would put all of this in international political economy more than anything. But so anyways, right now we have dollar strength. It's not surprising. I don't think it's forever. I'll get this. That's enough for me to get out of my peso, though. I'm just going to close my peso for like maybe a 3 pip loss. I don't care about it anymore. All right, so U.S. dollar strength kind of makes sense with what's going on now. What about yens? Let's put them all on daily. Okay. I'm going to put all the yen pairs on daily. I'll try to get the zoom about right. All of them. So I got to click in on this. And in a couple of times on that. All right. Is the yen generally strong or generally weak? Cool. And when did we expect this to occur, this trend? No, when did it start? Or when did we expect it to start? Monday after non-farm payrolls in January. So yeah, basically the first week. Right? Okay. So now enough time has passed. We're only 3 weeks away now from the calendar target for this move. How did I do so far? No, Henley, not August. It would be basically the non-farm payroll, the Monday after non-farm payrolls in April. How'd I do? Amazing, right? Because weren't these yen pairs by and large simply going up? When we talked about it coming, it's coming, it's going to come, it's going to hit this particular day. It's coming. Everyone on the planet shorting yen, get ready. You're going to buy it while everyone else is selling it, and then everyone's going to tell you they don't know why it's doing it. Just cool, right? Did you make millions? So here's the thing, right, for everyone. We were talking about this up in here, like if you were missing it. I remember framing it like this. I said, in the past, I asked you, and this goes even back to this period, probably October, November, if you may remember this of last year. I said, if you had a crystal ball that accurately predict the future, would you make a lot of money? Would it help? And everyone said, right? Right? Everyone said that that would be enough. Like if you had foreknowledge of the future, it would be easy. And then I remember talking about it here, like if you're missing it and you had a crystal ball that somehow told you the yen pairs were going to get strong and you were missing it, what would you do about it? How many people remember that conversation? I think we had it twice. That now you have an accurate or a fairly confident picture of the near future and you're still missing it, then maybe it's not the crystal ball, maybe it's something else. Maybe it's you. Maybe you need to change something. You need to change your behavior somehow because now you have a reasonable assumption of the future that's reasonably accurate. So why aren't you making money? Right? So where are we at that right now? Right? So this has moved 700 pips. This one currency pair. Actually, January 1st is up here. I'm sorry, 900 pips. Is that right? No, no, that's right, 760 pips. Cool. Let's move, we'll say 750. It's moved 750 pips, that one pair. And you knew it was coming, and you know what day it's likely to start. Well, don't say you're an idiot. Okay? I suppose you'd be an idiot if you don't change now. Well, Emilio, we don't know what is actually going to happen. But you can look at it, Emilio, as a hypothesis. And then sort of be ready to test your hypotheses using some sort of scientific methodology. Is it going up? And if so, how are you going to trade it, right? That kind of thing. Right, Ted. It's called learning, right? That's something our brain can do, is learning. But you might want to really look at these things, right? And just really ask yourself some pretty deep questions, right? For anyone that's taken the swing trading course at FX Bootcamp, right? What could we say about that? Well, this is a sell zone. This was 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 a sell zone. And I guess this week here, right? Oh yeah, and I think I got heckled at NFP one time about it. Well, Emilio, that is trading. Emilio says, so over the next few weeks, we should watch it and see if it matches our expectations. You described what being a trader is. The only difference is I'm spoon feeding you one particular hypothesis. Right? You got to do it with your hypotheses and stuff. But like, I think the swing traders will concur. If you were only a bear and you were looking for reasonable places to sell on the Aussie yen, I think most of these, not all of them, but most of these were pretty reasonable sell trades if you were already bearish, and you may have already been a bear since the first week of January. So it kind of helps your swing trading, right? How many people here believe that this Aussie yen was reasonably shortable if you thought this market was bearish and you simply used basic swing trading techniques? Was it reasonably, most of the time, tradable? Cool. Yeah. So I don't know how many of the 750 pips you would have gotten, but you may have gotten even more than that, right? Because you didn't trade a straight shot, right? You could have made 1,000 pips out of a 750 pip move because it moved up and down multiple times, right? But anyways, so it's just food for thought. Because at some point, the trader psychology aspect is something that needs to be worked on if you're going to be around 10 or 15 or 20 years from now. Okay? So CAD yen moved 1,000 pips in that period of time. Pound yen moved 1,000. Euro yen would have been the most dangerous, but I told you that. It's made sense to me. The peak to valley here is only 800 pips. right? But isn't that where, right? Isn't this where, James, we essentially we've identified an aspect, an important aspect of trading that lies beyond technical and fundamental analysis, right? So that would be something to work on. So you said the doubt comes in with the timing, because I believe it was expected 2 or 3 weeks earlier. All right. So there's something that you expected it didn't happen at exactly the right time, and you gave up on it. Yeah. No, well, just in general. I don't mean you, but we all, us all, people, traders need to work on this, right? And so what is enough time for these large macro moves, right? If I say the yen pairs are going to rally the 3rd week of August, but it happens the 3rd week of September, do you give up on it? So anyways, I'm planting a seed. I hope you ponder. Yeah. Forgotten, moved on. But that's the problem though, right, Brian? That's the lack of strategy. So how many times did I ask you guys to sit down and write one PowerPoint slide that said you were a bull on a particular pair or even currency, a particular currency, or a bear on a particular currency, and gave me, 4 or 5 bullet points on why? I must have asked 5 times, 6 times. And I'm like, I know no one's going to do it, but this is the key to your success. That you have an idea of what you're going to do in the future. And if you don't, then you're just going to be picking up crumbs. A slave to your 15-minute chart, and you'll never make big money. Right? Anyone willing to admit that we had that conversation? That if you don't do it, if you just don't think about this, you're just simply never going to make big money, right? So now I just showed you these 6 pairs move probably somewhere between 4,000 and 5,000 pips, and you knew about it in advance, in particular the day it would start. That's big money, right? Oh yeah. Ted, that's called a portfolio. But I talked about it for weeks and weeks and weeks and weeks and weeks, right? Yeah. So anyways, so now we're coming up to the end of this. Maybe 3, maybe 4 weeks coming. But like I said, I don't know when this is going to turn, because it'll turn when the Japanese repatriation trade is over. Is this a taxation issue or a fiscal year-end issue for Japanese businesses? Maybe. Well, certainly was in the beginning. And then the next step is this a risk-off play? They're different. And that can continue, right? But I would suggest in the next, let's say, 5 weeks, and this goes back to someone else that said, no, they kind of gave up. because it didn't happen in the 2 weeks they're expecting. Well, how about in the next 5 weeks? Even 6 weeks. How about the next 6 weeks? We expect the yen pairs to rally, not till the end of the year, but rally for a month, and maybe even to June. Will it happen? I don't know. Should it happen? Nothing has to happen. What prices would that occur? Around what events would that occur? Would it occur around a change in policy from the Bank of Japan, which we will hear about on Friday? Maybe. How about a Fed meeting? Those are two very interesting things, right? And of course, maybe the end of the repatriation trade as well. So that's what I'm saying. Like, how about between now and May 1st? That's a long time. But what about between now and May 1st, these yen pairs decide to go up instead of down? We could use tools to help predict the proper prices, right? What's interesting about this chart? Let's zoom in, I guess. I'm going to go on a 4-hour. What are these big fat lines? Brooke, really, why is logging into the webinar difficult? Nobody's told me that one before. Too slow? Huh. Anyways, so these lines are monthly pivot points. Right? R1, M3, PP, right? M2, S1, M1, S2. So what if this CAD yen keeps falling till this price down in here? We'll call it 79.50. And it's the third or fourth week. Let's say it's the last week of March. Should we start to assume something like that? Over a 1 or 2 week period? Well, Yeah, I think to reverse an entire market, we would want to see at least a double bottom, right? Because we got to convince all the bears that that bearish move's over. That's not going to be easy. And here's my guess. Even if it did occur, so let's say it does occur, and we do get a double bottom, and then it goes up, I think it would be a significant rally, but it will come all the way back down. So we'll call it a May rally. I think it'll be all of April, all of May, and half of June, let's say. And then it'll all come back down and won't move till basically September, October. That's interesting, right? Alex, it's just a hypothesis. So now you'd have to like be a trader. You would have to trade it. So I don't know. I hope you decide to answer that basic question. Why'd you miss it if you knew it was coming? If it was happening in front of your face and you didn't recognize it, why? I think if you're willing to address, I think you'll move on to the next level, onto the next stage. That's a beast of a question. The reverse the situation, you did what you normally do, right? Even though I said, do these basic exercises, and if you don't do them, you'll never get filthy stinking rich, and you still didn't do it. You did what you normally do, and you missed it, I think. I don't know, I can't speak for everybody, but I get the general feeling that you missed this huge move, even though you knew it was coming. And so you went back to your old ways, and you proved it to yourself. I hope you say, you know what? He's right, and look what happened. I made 200 pips, and I was super happy, and yet it moved 5,000 pips, and I should be embarrassed, right? So now I hope you have this breakthrough. You're like, that is the last time I'm going to do this. And by the way, if you go back to videos probably 1 year ago, about this time we had the exact same conversation. Why'd you miss it? Right? If anyone's been to these webinars this long, we've had these conversations before. If you knew it was coming and it moved thousands and thousands and thousands and thousands of pips, why'd you only make 200? Right? Well, no, but it's part of the growth, right, Marina? Right? It's just part of the growth. And so we have to have this like psychological breakthrough, and it's just the burden of being a human being, and I don't know why, right? I don't know why. I'm not a psychologist, but I know it's necessary that you have to have this breakthrough, and you're like, aha. Right? Aha. So that's why I say, well, if we think over the next 4 or 5 weeks that this might turn and go north again, you know, several hundred pips north, I don't know how many, but wouldn't it be great to like combine March's monthly pivots with April's monthly pivots, which we don't have yet because we're so far away from that, but combining those two would probably be a good play, right? Cool. Okay, great. All right, thanks for sticking with me. Let that, oh, that's not the right one. I didn't want Oz. on that. Okay, now. Let's get rid of that. Beep. All right. How far will oil fall? Well, we made it to the 2618 of the initial sell move. And now I'm wondering, let me use a triangle maybe. Right? I'm looking at this low being lower than that low. Okay? But I'm looking at that. So we're in fib wars right now. A bear's going to sell this, and a bull has already bought it. Okay? So we talked about buying it here. We talked about selling it here. This stuff is what amateurs do. What do amateurs end up doing? Losing money. Right? We can all agree to that, right? All right. So if you're a bull, you would buy it down here. And we set this up, by the way. And if you're a bear, you'd sell it here, and we also set that up. So this is bulls. This is bears. What's in the middle? Pigs. What happens to pigs? Pigs get slaughtered. That's right. But can you see it? I mean, it's the middle of the range, right? And the real point here is I don't actually know what's going to happen next. Are the bulls going to win or are the bears going to win? I don't know. See, at least down here, I know the bears are going to take profit down in here, right? In the future, we know that. How do I know that? Support. So at least I know some of the bears are going to take profit there, and then some of the bulls might jump in and squeeze out the other bears out, and then we got a bullish move, right? Or vice versa. But in the middle, why would you get out if you shorted up here? You're going to be confident. Now, you may be misguided, but you'll be confident. And bulls are like, oh man, on the daily chart, I just picked up a 618 Fibonacci retracement. We're on our way up here. I don't know if they're right either. But I know if I was a bull, I'd have, at the very least, right, my stop jammed at break even. And if I'm a bear, I'd, at the very least, have my stop jammed at break even. And you sit it out. And you let the idiots fight it out, right? Do you want to be the gladiator or do you want to be the emperor? Hear the, oops. Well, let's just bring it down here. La di da di da da da. I'm not logged in, but hopefully it'll be fine. If I were a Forex trader and I would, okay, let's go impact. Let's go impact high only. All right. Let's do it this way. We got RB8 this evening, Reserve Bank of Australia. They're going to talk. Well, at least statement, right? There'll be a statement made. You're gonna read it? Yeah, Mr. T, that's coming up. I just need to confirm the process for your $5,000 account turning into a $25,000 account. Cool. All right, so here's an opportunity to feel like you're a real currency trader. Maybe trade the decision. If you can't trade the decision because it's the middle of the night for you, that's fine. Download the statement and read it and highlight it. Right? Cool. Bank of Canada, interest rate decision and statement. Seems to me if you were going to act like a real currency trader, you would trade it, or certainly at least download and read and highlight the Bank of Canada rate statement, see how they feel about macroeconomics, global risks, opportunities for growth. And then on Thursday, an interest rate decision and a statement. Maybe you could trade that like a real currency trader would and download and highlight the statement and find out how macroeconomics are impacting the 500 million people of the Eurozone. What are the risks and opportunities? What are the near-term and long-term outlooks for growth and levels of inflation? And then later that evening, if you wanted to feel like a real currency trader, you could actually be there when the Bank of Japan makes an interest rate decision. And if you can't, because it's the middle of the night, then at least you could download and highlight their monetary policy statement. Find out what their views of macroeconomic growth and inflation are. And if there are any mentions of changes in central banking policy in the near term. How do you feel about that? And then on Friday, non-farm payrolls in the United States, non-farm payrolls in Canada. Beautiful, beautiful trading day. Holy smokes, you could almost act like a real professional currency trader this week, huh? What do you think about that? Bank of Japan, European Central Bank, Bank of Canada, and Reserve Bank of Australia all giving you opportunities